Well, hello and welcome to another edition of MEMA Supplier Insights. Really pleased to be able to share with you our latest results from our third quarter MEMA OE Vehicle Supplier Barometer on innovation and capital markets. And very pleased to have with us here today Mark Holzer, Partner, Risk and Financial Advisory at Deloitte. Marcus, thank you so much for joining me here today. I really appreciate you being here with us.
Great to be back, Mike. Looking forward to the discussion.
Absolutely. We've got a lot of great content, so let's just jump right in. So with that, looking at the supplier outlook, as ever, we ask our members, are you more optimistic or more pessimistic? And here we see on the left of this chart, unfortunately, there's a higher level of pessimism once again. And while it is broken out there by light and commercial vehicle, there's some consistency on with the results here for this quarter. But what's more important here is the chart to the right, and that underscores that the supplier barometer index comes in at 39. And so this time, 39 is 11 points below neutral, and that's actually a 6-point decline from the second quarter. And so that is actually the 10th quarter in a row of building pessimism. And so, Mark, I think you've probably seen a kind of a similar tale. We know that our members, we know the supplier industry as a whole is under significant pressure. And I think even with, the push toward electrification, there's been lots of excitement, but wow, it really hasn't, there was a lot of enthusiasm, I think, right? And yet it's really underperformed, and there's been a lot of pressure. It's been mixed results, if anything. Can you comment a little bit?
You're right. You're right, Mike. And when I was looking at these results and the slide, it's interesting what's not on the right-hand side. Pending election, the UAW strike and new contract with significantly increased wages and benefits, trade tensions with China. The EV dynamic, EVs are hot, EVs are cold, hybrids are out, hybrids are in. And then this really unique situation around vehicle demand during COVID, where dealer lots were empty, we were selling at MSRP and then some. And now I think we've reverted back as an industry to what I'd call auto 1.0. Where OEMs are producing vehicles, pushing them out to dealers and putting money on the hood to move metal. So it's been a very challenging environment for suppliers. And then looking ahead again, there's the election, what most people think is going to be a flat SAR for the foreseeable future. So it's not a surprise that suppliers are viewing the market with some skepticism going forward.
Great points all the way around. So with that, we'll keep going here because I think, to your point, and we've covered this before, so it's not a big surprise, I don't think. But, in terms of the top threats in the industry over the next 12 months, number one, poor sales of vehicles for programs supplied. And so we know that there are a number of EV programs that have underperformed, and the industry as a whole. I think there have been some challenges. And then that coupled with a weakness in the U.S. economy. There's been a little bit of pullback. I think, obviously consumer spending has been actually pretty strong, but I think there's been some hesitation. I think U.S. sales have not been maybe as strong as what, there may have been considered. Certainly fleet markets have been, a little bit more robust. But some comments there in terms of, what you're seeing.
Yeah, no, I agree with all of that, Mike. And I do think, again, you have the Fed about to cut interest rates, which I think is in large part due to a recognition of where they think the economy might be going, which is slowing a bit. Again, you've got, depending on the OEM, significant increases in dealer inventory, and again, you've got this dynamic of uncertainty around powertrain. Where do EVs go from here? What happens with all the announced programs from the incumbents? What do we do with hybrids? So again, it's a complicated operating environment yet again for the supply base. And again, we've got an election coming up in 2 months, which may have a significant impact or some impact on incentives and the pace or direction of shift to EVs in general.
No, great points. Absolutely, absolutely. So with that, the other piece here too is looking at industry indicators, and when we call out, how is indicate what change, if any, your company's experienced over the following time frames. We look at a 12-month, delta and a 1-month change. And the two that stand out to me the most, and obviously there's lots of volatility here, but new orders are down, on both a 12-month and 1-month basis, but production's down dramatically. And so 50 being neutral here, similar situation, right? Where production, down, from on a 12-month basis, but down even here on a 1-month basis. And then costs, we know that, inflation has been improving, but we know labor, and then, certainly some of those, sunk costs on programs, investments that have been made, that's putting pressure here. This volatility is contributing to cost pressure as well. So here, let's take a quick look at financial performance. This is maybe not a big surprise, but obviously if we look at capacity utilization and its relationship with EBITDA, with financial performance, so on a median basis, 10% EBITDA with a 75% capacity utilization. We know that, utilization rates have struggled, and there's, looking at the market in aggregate, maybe not the most helpful, but it's important, it's relevant. But there are some pockets where it's going to be really low, and there are other pockets where it's stronger. And so even to your point, though, there are a number of programs that are there that have been historically very strong, but price points are very high too. The transaction prices remain high, and so that's also represents a bit of a headwind for some consumers. And so there's volatility, and that persists. And so if we look to the right, in general over the past year, how volatile were your company's utilization rates? I think it's very telling that here total industry, you're looking at a incredibly strong level of either moderate or significant volatility that's represented here by supplier responses. And we know that volatility is simply a profit killer. It's just a significant pressure.
Yeah, no, you're right, Mike. And these dynamics aren't really that much different at the OEM level. So I think you're going to see the trickle down of that into the supply base. And you're right, 72% of the respondents are expecting moderate or more volatility in their business going forward, which I think is telling. And this as well as anyone, this is an industry, particularly in the supply base, that kind of operates on a knife's edge of profitability. So when you lose 5 or 10% of util in a plant, that falls to the bottom line. So this is a very tenuous balance for suppliers to strike and manage going forward.
Yep, you're absolutely right. So listen, we're going to wrap up here. I just want to remind everybody that there are actually, for those supplier executives that complete the survey, there's an additional 15 to 20 pages of additional content that I want to make sure that you're aware of to kind of encourage you and say, hey, listen, there's a great opportunity for you to participate, for you to complete the survey and gain access to additional content. So with that, Mark, I really appreciate your expertise here today. Great insights as ever, but really compelling and a really dynamic time. So thank you for your input. Really valuable.
My pleasure, Mike. Thank you.
So look for us next time here at MEMA Supplier Insights, and we look forward to seeing you here at a future event. Let us know if we can be a resource. Thank you and take care.